This is an update on MSTR MicroStrategy Incorporation, a company in the technology sector and software application, and here we are at a colossal pivotal inflection point of this November 2021 reactionary high with all kinds of reaction errors all across the board here. And here we are, we got rejected right to the button, right to the T off my 327.27 price resistance, coinciding with this primary downtrend line called dual resistance. For what it is, we have this hidden primary uptrend line resistance up above, and again, here we are. Key risk reward ratio is skewed to the downside, and again, perfect time to scale in. And again, that was good so far for a 3.3% drop on the day. I've added this minor uptrend line, primary uptrend line here off the July reactionary lows, multiple reactionary lows to help validate that as well. And if you're bullish on this stock, if you're bullish on MicroStrategy, hey, maybe you revisit right back to this primary uptrend line, start to scale in now. We have this especially, which will coincide with that May gap close. And again, you want to see a breakout. Dip buyers, bull traders, they want to see a breakout above and completely clear out this primary downtrend line coinciding with this 327 price resistance and go on and retest that hidden primary uptrend line. And again, sometimes with these hidden primary trend lines, they can move to the upside in a big way sometimes. So again, anything's possible. The risk reward ratio is skewed to the downside. It is a short trade setup. It is in the ball, the court. The ball in the court is to the short trade seller right now, right here. And again, it starts this time to scale in now. We do have a potential bullish MACD and oscillator movement up to the upside. But again, we caught this massive 56% crash. So we could afford the risk reward now. And if we get stopped out right above that, I'd say a solid breakout above that 327 price resistance, and it'll be time to scale out and maybe even reverse and go long on a back test. You know, especially taking out that hidden primary trend line. We take out that hidden primary trend line, you'll start to see a pretty super squeeze. Start to squeeze melt up, in my opinion. So we'll see what happens. Keep you updated if I see any more significance in the charts. It's a risk reward ratio skewed to the downside. First target 271.77 for a 11.7% drop, 249.59 for a 19% drop, down to 229.40 for a 25% crash, coinciding with the 50-day moving average. If we take that out on a complete backfill of the gap, 214.89 for a 30.7% crash, 180.90 for a 41% crash, and a revisit of the May low reactionary lows there, 135.70 price support for a 56% crash.